loss for the financial year at nearly 1,000 crores. Will you continue to report losses?
Yes, I think there's a number of answers to that. I mean, first of all, the losses that posted this month or this quarter, and also for the year, was at the PAT level was pretty much expected, and I think I've talked about that in previous reviews. In 2016, unfortunately, I don't see much happening in the Indian market, domestic market. Most of the segments seem pretty depressed, and we probably see that going on through most of this financial year. Our overseas business is performing very well, and I think we'll see that even stronger. If you look at our overseas business currently, the current pro forma run rate is over 73% of our revenues are now coming from our overseas business. So that's quite a turnaround over the last 12 months from that split. I would suggest that after we finished our discussions with the banks for realignment of our debt in domestic debt in line with our current cash flows, then that will be a big help to the company in terms of its interest cost and also its restructuring going forward. So I think 2016, in the first half, you're probably going to see pretty much in line with what you've seen at the moment.
John, your interest costs have doubled quarter on quarter to around 238 crores, and it's around 1.5 times your EBITDA generated as well. How do you plan to reduce debt over the next 12 months?
Yeah, I think we've already declared that we're on a monetization program, which has got three strings, which is our overseas business and also our Indian businesses in the core and non-core sector. In terms of, and our target, as I've said previously, is to raise $1 billion US dollars, circa 7,000 crores, which will be all used to reduce debt and therefore obviously reduce interest burden, which will be a significant move forward. In terms of that program, we're pretty advanced on that program, probably ahead of the game in terms of where we expect it to be, particularly with our overseas businesses, which are generating a lot of interest in terms of acquisitions and pricing, and we expect that to generate debt reduction, I would say within 12 months, maybe 12 to 18, but internally we're targeting in 12 months.
Okay, and have you signed any term sheet or shortlisted any buyers for the monetization of these overseas assets?
Yeah, obviously I'm not going to give too much details away. That this is a negotiation. All I will say is there's plenty of interest, both from trade buyers around the world to financial institutions. So we've been very, very pleased with the extent of the interest, particularly in the overseas business, which has been very encouraging.
Okay, fair enough. So what will be the debt picture, assuming monetization does happen in the next 12 to 18 months?
Yeah, if you look at our debt from a consolidated, Amtek Auto consolidated position, our debt's around about 14,000 crores. If you then look at what we're trying to raise, you can do the calculation yourself. You know, our aim is 7,000 crores debt reduction. So that, if we can achieve that, and we're pretty confident that we will achieve that, then that actually restructures the business quite nicely.
Okay, even your revenues have fallen 20% year on year this quarter. Which geographies are you facing pressure in?
Yeah, I think nearly all of the reduction is in India, across all markets. I think we've talked about, although passenger cars showing slight increase, but driven heavily by Maruti still. But if you look at the construction industry, you look at the agricultural industry, tractors, you look at commercial vehicles, you look at two-wheeler sector, you look at our non-auto sector in oil and gas, all these markets are under strain. And that's really where you're seeing the downturn in revenues. Our overseas businesses, obviously generated by recent acquisitions, have generated healthy growth. And I think that's evident by the fact that now what was 50-50 in terms of revenue split between overseas and domestic. It's now running at around about 73% of our revenues, group revenues now come from overseas. So you can see the overseas markets are still performing very well, and domestic market is still challenging.
Okay, so can you update us on the demand in Europe and the outlook there?
Yeah, I think if you dissect the overseas business, our Japanese and Thailand business is performing pretty much in line with expectations in terms of volume growth. Our Japan business does a lot of exports, as does our Thailand business, so that's encouraging. Europe, driven by still a very good Germany market, and the UK market is still healthy. If you then move to the Americas, Brazil's still a problem, but it's relatively small in the overall picture. But Brazil volumes are down significantly. But that's counterbalanced by the US, where the market still continues to perform at very high levels.
Okay, have you completed the synergy plan at Cooper, and what kind of earnings will you expect from that business?
Yeah, on synergy plans, before I come on to Cooper, I think it's also worthy of saying that we've really completed our plans now at Neomai Tech4, which was the acquisition we did a couple of years ago. We're now running healthy EBITDA margins at Tech4, around about over 10%, which is nearly double where we were when we bought the business about 2 years ago. So that's been a very successful turnaround. In terms of Cooper, we're not completed yet. We only took that business on relatively recently, and we're part way through the synergy programs and the turnaround plan, but we're pretty confident we're going to see pretty similar results to Cooper that we've seen at Tech4. So the team are working hard at the turnaround plan at Cooper, and we expect to see that coming through in benefits in the coming quarters.
Okay. What about demand in the domestic business, John? That's been very fragmented and weak. Do you expect more pressure on your business from that particular segment?
I don't think we're going to see much more pressure. I think the market is at the low ebb. I think everybody is hoping, willing, and praying that the domestic market picks up. I think we're at the bottom of the trough, and I think there are little signs that the commercial vehicle market is starting to pick up a little bit. I am concerned about agriculture and construction. But I don't think we're going to see much more of a reduction in our domestic market. We also have in the year a record order intake with 13,000 crores of new business coming into the group. So that will, over the next coming months and years, be very useful to the growth of the company.
Okay. Any update on the FCCB issue of Castex Tech?
It's done and dusted. We fully converted that on September the 10th, I think it was. That's already been converted to equity. So that's, as far as we're concerned, that's a closed issue.
Okay, but John, as per our understanding, some of the FCCB holders were not happy with that conversion and even challenged the same legally.
There was a challenge which we went to court and won that battle. I'm not aware of anything as I stand here today. Anything else?
Okay, fair enough, John. We leave it on that note. Thanks very much for joining in and talking to us. With important updates coming in from Amtek Auto and the group itself, where they are in advanced stage of raising money through the stake sale process. Overseas businesses, in fact, got good amount of traction and investor interest, and the total consolidated debt